Hi, welcome to the CLS Monthly Market Review. I'm Rusty Vanneman. With me today is Paula Week. Hi, Paula.
Hey, Rusty.
How's it going?
Well, it's been better. Rough start to the year, right?
It was a tough start to the year.
I mean, January markets were down about 6% overall. What are some of your thoughts on that?
Well, I think some of the reasons why the market was down, they're talking about slowing China's growth, talking about weaker commodity prices. Haven't we known about this already?
For a long time.
I know. So I just think, the market needed a correction. There's a lot of angst in the air, election rhetoric, all the sensational headlines, the worst start to a year since X. And I just think it sort of fed on it a little bit. We're cautiously optimistic moving forward, though.
Right. And then one good thing is that, fixed income has been a bright spot as well.
Definitely a bright spot. Isn't it funny? Everybody keeps talking about how they hate fixed income and bonds, but again, it's the ultimate diversifier, generated positive returns. 10-year Treasury yields dropped back below 2% again. Yeah, definitely a bright spot.
Just goes to show how you should stay balanced as an investor. So
I like it.
yeah.
Stay in balance.
But anyway, has the market action over the course of the last month, in your view, changed our outlook?
Our investment themes are intact. I think they're working pretty well. Of course, the first theme is the X factor, talking about smart beta ETFs, and some of those include high quality, did very well this past month on a relative basis. Lower volatility ETFs did well. That's very dominant in some of our portfolios. So I think that did well. The international opportunities, I think, held in there. There's a perception, again, that if the market's down, international is just going to get crushed.
Right.
Not true. It depends on relative valuations, market narratives, the whole thing. Some of the international markets held up again pretty well. And then again on creative diversification, owning bonds, owning alternatives, a lot of them held up pretty well last month. So big picture, no change. Smaller picture, yeah, there are some changes. We like to buy stuff on sale. A lot of stuff on sale. You've been buying stuff in portfolios. We've been buying stuff in portfolios. Everything from nibble on a high yield to energy and emerging markets. So, yeah, we've been buying stuff.
Yeah, absolutely. Switching gears a little bit, going back to last week when you were in Florida while we were all here in Omaha.
Thanks for staying.
Yeah, thank you. Yeah.
I knew you wanted to.
Held down the fort.
Yeah.
So tell us a little bit about some of the highlights of the conference.
It was cold there. It was cold and miserable.
I don't feel sorry for you.
It was. And I actually had a hotel that had no heat. So it really was tough, right? Yeah. But actually, no, it is the big industry conference. It's bigger than ever. There are a lot of benefits, everything from fortifying relationships, meeting new people, learning the latest in portfolio construction, the latest in ETF innovation, which includes a lot of that smart beta stuff that we love.
And then I know that the trends have really been shifting gears over the course of the last couple of years with ETF flows and traditional mutual fund flows, as well as the smart beta structure. Can you highlight some of those trends that we're seeing?
Yeah, absolutely. So the old technology of the mutual fund, again, the mutual fund, arguably one of the greatest financial innovations of all time, bringing diversified portfolios to everybody. ETFs are the new technology. It's basically mutual funds at a much cheaper price, and for taxable investors, are much more tax efficient. So we've been seeing that drive, but I think what's going to accelerate it now is exactly that smart beta stuff. It's our theme, X Factor, talking about smart beta, which basically is the essence of active management at a fraction of a cost. I mean, it's just a trend. It's big now. It's just going to keep getting bigger. And I think it bodes very well for the ETF space and for what we do at CLS, managing ETF portfolios.
Absolutely. Great way to really try to balance out the risk in some of our portfolios using strategic beta.
Absolutely.
Yeah.
Well, thanks, Paula.
Thanks,
for
Rusty.
helping me out. And thank you for watching. We'll see you next month.